Hello and welcome to India Invest, a channel where we talk about personal finance, basics of fundamental investing, as well as discuss great companies to invest in the Indian stock market. Today's video is a company analysis, and this analysis will be about a special manufacturer, a niche manufacturer of tires. So it's a very special company in the tire industry. And if you're an avid sports fan, it's possible that you have seen the logo of this company on your favorite player's jersey. So the name of the company is Balkrishna Tires. That's the logo that you may have seen on your TVs a lot of times, BKT. So as the name suggests, Balkrishna Tires is involved in manufacturing of tires, but that doesn't make normal tires. It doesn't make tires which are used in cars, bikes, or buses, but it makes a special kind of tires called off the highway tires or off the road tires. So what are off the roads or off the highway tires? As the name suggests, these are tires for vehicles which are not used on the roads or on highways. So they're not about cars or autos or buses, but special vehicles which are meant for agricultural, industrial, construction, and earth moving purposes. So off the highway tires or OTR tires are a special category of vehicle tires that use deep tread to provide more traction on unpaved surfaces, meaning surfaces which are not roads, such as loose dirt, mud, sand, or gravel. Balkrishna Industries is the largest of the highway tires manufacturer in India, with an achievable capacity currently of 285,000 metric tons. So BKT is a leading OTR exporter. So it's India's leading player in the global OHT market. It has a wide and comprehensive product portfolio. So it manufactures a very large number of different kinds of tires, currently leading up to 2,700 SKUs, meaning 2,700 different types or models of tires. It has a capacity of 285,000 metric tons per annum. It has sales to over 160 countries with a very strong distribution network in America, Europe, India, and the rest of the world. It has a strong OEM presence as well. It has strong partnerships with global OEMs. So if we talk about BKT, it basically is a leading manufacturer in three different categories. It first makes agricultural tires, industrial tires, and mining and construction tires. So in agricultural tires, what are the sort of tires that they make? They have tires which are used in tractors, in harvesters, in agro trucks, in tankers, in rototillers. So just by looking at these pictures, you would realize that these are very special kind of tires, and they're all very different from one another, meaning every different kind of tractor or harvester would need a different kind of tire, which is why this company needs to maintain such a large number of SKUs. If you talk about industrial vehicles, then BKT manufactures tires for vehicles like excavators, compactors, military trucks, forklifts, or even mobile cranes. And in mining and construction, it makes tires for articulated dump trucks, loaders, scrapers, underground mining vehicles, haul trains, etc. So this was just an example of the kind of tires that they make. They make a very large number of tires. So you can check out their website if you want to know exactly how many different kinds of tires they make and what are the various other types that I have not mentioned here. So a quick glance on the history of the company. So in 1987, the first plant was started in Aurangabad, and the founder chairman was late Mr. M.P. Podar. So the Podar family is currently in the management as well. In 1995, they started production of the highway tires. So they were initially making normal passenger tires, but then they decided to sort of focus on this niche category that no one else was focusing on. In 2002, they started their plant in Bhiwadi. In 2004, they had a launch of radial Agrimax tires. In 2006, they had another plant in Rajasthan. And in 2009, for the first time, they crossed 1,000 crore turnover. In 2015, they started their greenfield plant in Bhuj, Gujarat. In 2018, they announced their Capex and Future in Bhuj. In 2021, they commercialized a new replacement plant in Waluj. And in 2022, they commercialized brownfield tire plant at Bhuj with a capacity of 50,000 metric tons per annum. The company basically has an export led focus. So it manufactures tires in India and then it sells it to the rest of the world. In India, it has 5 manufacturing plants in Waluj, Maharashtra, Bhiwadi, and Chopanki in Rajasthan, Bhuj in Gujarat, and a mold plant in Dombivli, Maharashtra. So, if you talk about their sales, a majority of their sales come from agricultural tires. Around 66% of their sales are from agricultural tires. Their OTR tires are around 31%, meaning their industrial and mining tires, and other tires are around 3% only. Out of these tires that they sell, around 70% are replacement tires, and only 27% are OEMs, meaning supplying directly to the company that is manufacturing the vehicle. So that sale is around 27% only, and the rest of them is replacement, meaning the people who own these vehicles, when they have to replace tires, they buy their tires from BKT. If you look at the geographical sales, 54% of their sales come from Europe, 16.6% come from Americas meaning North and South America, around 18% come from India. So they're actually exporting 80%, 82% of all their tires that they manufacture. So only 17.8% is sold in India, and then 12% in rest of the world, leaving Europe, America, and India. So why do I think this company is worth your analysis, worth your attention? Is because I think this company has a moat. It has a very strong moat. If you don't know what a moat is, I will link up there a video which I have made about what are economic moats and why companies need them. So do check it out, because it's a very detailed video on what moats are, what are the different kinds of moats, and how they actually help businesses survive and even kill competition. So what is the moat of Balkrishna Industries? So if you want to understand a company, the best place to start looking for is the company itself, it's the company's resources, its website, its annual reports, and its con calls. So I've put up a snapshot of their annual reports and con calls here to make you understand what this company actually is and what are its modes. So the key product range of this company is specialty tires, as we said, of the highway tires. Now this tire segment is highly and capital intensive segment, because in this segment you have to maintain a large number of SKUs, a very large number of different kinds of tires, but then each of those tires will sell in a very low volume. Okay, so because you have to maintain such a large number of SKUs, there's going to be a lot of money that you need as investment. There'll be a lot of money that will be tied up in inventory, and it's not a very lucrative thing for other tire manufacturers, especially uh, manufacturers of normal car tires, to sort of have a sub branch here. Unless you're fully focused in this segment, it's very difficult to enter this segment. So that's the first mode. The second mode is, this segment is also very labor intensive. Okay. And that is precisely the reason why BKT is so successful, because it is labor intensive. Company that is able to reduce its labor cost will be the company that will win in the competition. And where do you find cheap labor? Well, you find it in India. So BKT manufactures all of its tires in India, and because it manufactures it in India, it has very low labor costs compared to the rest of the big companies that it competes with. For example, Michelin. And if you compare it with Michelin, BKT has a clear advantage because of its low labor cost. This segment is also not exposed to technological obsolescence nor wide fluctuations in demand of its products. So it's not completely cyclical. So there's a certain amount of stability in its sales, because again, as we said, a large number of its sale comes from replacement tires. So replacement tires which have already been installed will need to be replaced in a certain amount of time, so that leads to recurring revenue. This company is also continuously marching ahead to explore incremental opportunity. It wants to develop a very special kind of ultra large earth mover and mining radial tires. So the company has set up an ultra large size all steel OTR radial tires in Bhuj, and it's setting up a brownfield tire plant to increase this capacity. It's also moving from bias to radial tires. So these are the two different types of tires. So radial tires are much more, they can tolerate much more heat, and they're much more durable. So this company is also focusing on that aspect. So that's the big mode, the technology as well. So if you have a look at their con calls, you would realize how they're operating. So this is one question that was asked in a recent con call. So there was a huge gap earlier between the prices of BKT tire and the prices of your competitors. So it was very large in 2005, 6, 7, and the gap is slowly narrowing down. And currently it's about 15 to 20%. So in 2005, 6, when they actually started focusing on this segment a lot more, this gap between their prices was much higher. And even now, when it's reducing, it's going to 15 to 20%. So that's a lot. So if one tire sells at $200, BKT tires sell 20% cheaper in America or Europe. To the low cost is also backward integration. So the major raw materials required for manufacturing of tires are rubber and carbon black, and BKT has backward integrated their carbon black capacity. So 100% of whatever they produce, carbon black that they're producing, they're using it for their own manufacturing, and they're also increasing this capacity of carbon black, so they're increasing their backward integration as well. The second good point about this company is its healthy financials. So if you have good moats, as we saw in the first one, you will have good. So basically, they have a very strong business model with great moats. So what are the moats? It's a very technical business. It needs expertise. It's a very capital intensive business. It needs a lot of capital. It's a labor intensive business, and a company that is able to achieve cheap labor will win. And if you backward integrate, you will reduce your dependence on other companies. You will reduce your raw material price fluctuations, and you will reduce your cost as well. So these are the great moats of BKT. The second great strength of BKT is its financials. So good financials are a result of great moats. So this company has been growing very well, even when the market itself is not growing that much. So the market is actually not helping BKT. BKT is increasing its market share. It's growing much, much faster than the market. So if you look at its past 5-year performance, from FY18 to FY22, it has grown its sales at a CAGR, volume sales at a CAGR of 10%. So in 2018, it had sold around 2 lakh metric tons of tires, and by 2022, which was a very good year for BKT last year, they have sold 288,795 metric tons of tires. Their FY23 guidance, next year's guidance, is 320,000 metric tons, which is again a great jump. Just looking at their last quarter, same period between 2018 and 22, their sales were 4,400 crores in 2018, and they've now increased to 8,295 crores, which is around twice. So they've increased their sales 2x in the last 5 years. The profit also, net profit in 2018 was 736 crores, which has now increased to 1,435 crores, which is also 2x. So in the last 5 years alone, they have increased their sales as well as earnings by 2 times. So the company has performed quite well. If you understand that the market itself has not been helping the company, the market is growing quite well. It actually had a period of degrowth as well, and even in that period, this company has actually gained market share. So that's the only way to grow in a declining market, is to gaining market share. So its compounded sales growth in the last 5 years is 17% CAGR. In the last 10 years, it's 11% CAGR. Their compounded profit growth in the last 3 years is 24%. In the last 5 years is 17%. In the last 10 years is 18%. And the stock CAGR has also grown in the last 3 years at a 32% CAGR, in the last 5 years at a 20% CAGR, and in the last decade at a 30% CAGR. So over the last 5 years, the revenue has grown at a yearly rate of 12% versus industry average of only 1.73%. Their net income has grown at 22% versus industry average of minus 6%. So the competitors, the industry itself is losing big time, but BKT is growing like anything if you compare it with the rest of its competitors. It has increased its market share from 5.76 to 9%. It has a good market share in the agricultural tires, not so good in industrial and mining segments, but it is increasing its footprint even. So the third important point about this company is its future plan. So past performance is one thing, but you will not make money in a company that has done exceedingly well in the past, because when you buy the share, you actually help the existing shareholders. You will only make money if the company does exceedingly well in the future as well. So understanding what the company plans to do ahead is the most important thing while analyzing a company. So this company has a good focus for the future. It has a lot of new capex coming on. So the first is their brownfield tire plant at Bhuj. So they had a debottlenecking and brownfield expansion at their Bhuj plant. So their expansion is to add capacity of 50,000 metric tons per annum. So as we saw, their achievable capacity was around 285,000 metric tons. And this year they had a sale of 2,088,000 metric tons. So they're actually running at full capacity. So they have to increase their capacities. So this expansion of 50,000 metric tons per annum is actually a very important step to increase their capacities, and this capex will cost around 800 crores. Their carbon black and captive power plant uh, capex is to increase their carbon black capacity from 115,000 metric tons per annum to 2,000 metric tons per annum, including 30,000 MTPA of high value advanced carbon material. So this facility will allow much larger control over supply chain while fulfilling increasing demand. So they can also integration by putting up this carbon black plant. So they want to use all of their carbon black for their own manufacturing, as well as have some amount that can be sold to meet the increasing demand of the third parties. So this capex will cost up to 650 crore, and it will complete by H1 FY23. So these two were their growth capex, and the other two are modernization and automation and upgradation at their Rajasthan plant as well as Bhuj plant, which will increase their quality and efficiency. And this capex will cost around 450 crores. They have another capex at their old Waluj plant, which was to install latest machinery and replace existing machinery and upgrade certain systems. So this was going to cost 350 crores. So their current achievable capacity is 285 metric tons per annum, including the new Waluj plant that commenced operation in September 2021. The brownfield capex at Bhuj will add 50,000 MTPA. The old Waluj revamped plant will add 25,000 MTPA. So the achievable capacity by the end of FY23 will be of the first quarter of 2022. Their brownfield tyre plant of 50,000 MTPA has been commissioned. Their complete ramp up in production will be by the second half of this year, and the capex cost was 800 crores. Their carbon black and captive power plant expects commissioning of 55,000 MTPA in the next 2-3 months, which is in around May or June of 2022. And the project of advanced carbon materials will be commissioned in the second half of FY23. Their modernization and upgradation project is on track, and it will complete by the first half of FY23, but they have kept their Waluj upgradation plan on hold, and the operation of this plant will continue, but the 350 crore capex has been put on hold currently. So they have good plans to increase their capacities in the future, and they're also focusing on this 50,000 MTPA that they've expanded in Bhuj is for the all steel radial tire, one of the largest of tires, the largest kinds of tires. So that's a very special niche category of tires, and this will help them in sort of increasing their margins and also diversify into segments that they are currently not very strong in. So the fourth strength of BKT is its brand name. So if you remember, I told you in the beginning that if you're an avid sports fan, you may have seen BKT on your TVs before. So BKT in India has been an official partner of 8 teams in IPL, the Indian Premier League, and it has a large brand activity going on in other countries as well. So it's been focusing on sports events everywhere. And if you think about it, that's a perfect event, because what do you think people who use agricultural and industrial tires watch? So in France, in USA, in Spain, everywhere they're focusing on sports leagues, and they are increasing their brand presence everywhere. And because they're increasing their brand presence, they can also move towards a more premium segment where they don't have to be the lowest cost producer as well. So that will also help in the margin increase. The fifth important point is they are the best among peers, not just in their own segment, but if you talk about their entire tire segment in India, the entire tire industry, if you look at the other companies, you would find that BKT actually has the best fundamentals. So, for example, its sales have grown the highest if you compare it to, say, MRF or Apollo or ceat tires. Its ROC is the strongest as compared to the others. Its ROIC, which is return on invested capital, is also the highest. Its ROE is exceptional if you compare it with its competitors. So if you want to invest in a tire industry, in a tire company, in India at least, I think BKT is your go-to choice. But before you uh, put all your money in this company, there are also some risks. So the antithesis is actually much more important to think about than the thesis. So what are the risks for BKT? Well, the first is raw material prices. So this is very evident if you look at its latest quarterly results. So BKT in Q3 FY22 had a great. So if you look at its latest quarterly results, in Q4 of FY22, they had their highest sales ever of 77,000 metric tons and an income of 2,400 crores, which is a massive, massive jump if you compare it to last year. But because of raw material fluctuations, their EBITDA margins, which were 31.9%, around 32% last year, dropped to 23.7% this year. So they increased their sales by a massive 13%. But if you look at the end here, the profit after tax increased by only 2 crores. So raw material fluctuations is a major concern for companies like BKT, and it remains a risk. I mean, you cannot completely avoid it. You cannot backward integrate into everything, although the company is trying to increase its presence in carbon black, but it has to depend on other sources for its key raw materials. The second important risk is geopolitical. So because the company exports such a large number, such a large percentage of its volumes outside of India, geopolitics plays an important role. Say, for example, the current Russia-Ukraine war in Europe. Now, something like that can affect companies like BKT. And not just that, because they're exporting to other countries, they are exposed to government regulations of importing countries as well. So, if you're living in India, you may have heard of Atmanirbhar Bharat. So that sentiment, that nationalistic sentiment, is present everywhere, all around the world. We are moving away from globalism to a protectionist world. So, for example, in 2017, the US Department of Commerce had imposed a countervailing duties, which is import duties, on some of the Indian tire manufacturers who exported OHT to US. For BIL, this was 5.36%. So whatever was the price of their tires, it had to be increased by 5.3%, which was going to be the duty of the US government. So this was not likely to have a lot of impact on the overall revenue because their uh, presence in North America was small at the time. But uh, BKT continues to remain exposed to impact of government regulations of importing countries. For example, what happens if EU, European Union, decides to put up an import duty on BKT? I mean, that's the major market for BKT. So something like that, BKT is always exposed to such government regulations. And the third risk that the company has is currency risk. So because the company exports to a lot of countries, it earns its revenues in the currency of the local of that particular country. So the fluctuations in the currencies does have an impact on the revenue of BKT. But even then, I think the company has good enough moats and a strong plan for the future to avert and avoid these pitfalls. So you can uh, look at this company. Have Don't put your money into the company because there's a video about it. Go do your own research. Read about it. Read about its competitors as well. You can only cover so much in a 20-minute video. So do have a look at this company. And yeah, so that's it. Do like this video if you found it helpful, and do comment if you want me to analyze some other favorite company of yours. Thank you.